Hello there, everybody. It is me, Disco Trader, and today it's gonna be my full tilt boogie. I'm gonna show you some things that I do usually to analyze the market. And it's gonna be my full tilt analysis today. As I said yesterday, I was so excited that the Dow Industrial will bust this pattern, but it didn't. As I said yesterday, amazingly, it's still officially head and shoulder, and yes, it's still head and shoulder. So what happened today differently? A form of rejection from the upper Bollinger Band, right here, and this high is still respected by the price action. So the natural target usually is the 20-day moving average when you hit the upper end of the Bollinger Band. See, and today, this ugly candle called bearish harami. The bearish harami is a reversal candle, but it needs confirmation. You can see it all over the place. This is a bearish harami. White, red, inside. White. This is not. This is one black crow. You could find a lot of this is one black crow. So usually a bearish harami is an okay reversal candle, but it needs confirmation. So what damages did the Dow Industrial have today? A rejection from this high, rejection from the Bollinger Band. The natural target is here, reversal candle, and negative divergence all over the place. Hence, still lower high, so far, lower high, bear market rally, 5 waves down, wave A, 3 waves up so far, wave B. Is it here, or the measured move once the pattern is busted here, or maybe close to the 200-day moving average? Well, in general, I usually never ever go along in any asset or asset class as far as the price action is below the 200-day moving average. So this is no for me, no long. So you have to have disciplines in order to survive in the market. So my first rule: never long anything below 200-day moving average. I made my own rule a couple of decades ago. Once the market goes down 20%, I wait for at least 6 months to go back long. So I noticed that back in 2000, March 2000, they had amazing rally in the Nasdaq. It failed in August, and boom, and after that it failed. And there was another attempt in 2001, and it failed. 2008. October 2007, the first leg down started. Then you have the reversal in March. Then you have the first leg down was in June 2008. Then August 2008, the Lehman Brothers. So I had that my own rule. So now we talked about the Dow Industrial, which is really really impressive. That the head and shoulders still intact. What is making me now believe the head and shoulders is still intact is that Dow Transport. As I said before, and that's what I believe in. This bad boy leads the market. This is the bearish line. This is December 2018 right here. It's still below it. This is where you found your B wave supposedly, and the head. So what happened yesterday, as I was laughing, the head and shoulder was still intact. Nothing happened to it. And today still intact. Not only that, it respected the old resistance of the left shoulder. See? It's almost identical anything. Now the neckline is like that, is right here, which is still bearish. So what is this telling me? This is telling me the market is in indecision. It's leaning toward bearishness. The head and shoulders still intact, and the Dow Transport is, emphasizes on that. So I believe it now, but I'm still I'm still wary about the market that this pattern might be busted, but the Dow transport tells me otherwise. And now I'm going to look at the VIX. The VIX is another thing I always notice. What I notice now at the VIX, so you have the fan lines right here, 1, 2, 3. So you need to close above 40 in order to have the 1, 2, 3 reversal in the VIX. So if you have that, this will bring back volatility in spades right away. So the developments today for the VIX, you have almost a bullish engulfing, but you have a piercing, definitely a piercing right here. It's a very reliable reversal candle, and the RSI is pointing up, which means the momentum is up. So volatility might spike again. This is what the VIX is telling me right now. So I go back to TLT, which is risk off, which is the bond market. Bond market is indecision. It's anemic. It's not. That's why the risk parity now is not working properly like it used to. So in a day like that, the TLT should be going up more than 33 basis points. But still, to me, this is unchanged. So risk off, I really don't know if it's risk off or not. But to tell you the truth, since the start of the beginning of the bear market, the risk parity did not work at all. Look, everything went down together. Boom, 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 with the market, with the Dow. So I used to do that before, but I still look at the TLT. But now it's irrelevant. Hopefully it's going to be relevant soon. So number 4. So I did the industrial transport, VIX, TLT. Now I look at the USD, which tells me where is the risk haven going to be. This is the start of the bear market. Everybody went to cash. They went to the USD. So a major move for the USD tells me there will be a liquidation mode. So that's why I always gotta watch it. So this is yesterday chart, but it's not updated. I'm gonna look at the UUP, which is the ETF for the USD. So this is a triangle. A, B, supposedly C up. So once that triangle is breaking to the upside, watch out for liquidation mode. Watch out for total meltdown, like what happened in March. This is the UUP. So it made almost a hammer. It's a hammer. It's definitely a hammer. So it lost 11 basis points. This is UUP. This is mimicking the US dollar. So it found support at the Bollinger Band. So the next natural target is the 20-day moving average right here. So that's what I'm saying now. So my take today is the head and shoulder is still intact. Bearishness is still sits in the market. And the transport tell me that the industrial is still bullish, yet this is an ugly candle, yet it's still head and shoulder. So we wait and see, but so far a lot of bearishness, and all I say is keep your fingers up and disco. You know what I mean? That's it. And what I do, full tip boogie. Enjoy your life. Disco is the alpha and omega. The alpha and omega. Enjoy yourselves. Love yous.